Hi everyone, I'm Laurel Marie Hickey. Welcome to What's Blank Got to Do with It. Today's What's Blank topic, financial fluctuations. So what's financial fluctuations got to do with that? If you were to look at a benchmark balanced portfolio, so say you looked at an Andex chart, which is a chart of the performance of various asset classes over 70 years, and if you were to go all the way to 2008, you might see some similarities in 2008 as we had in 2022. As an example, periods of volatility, they don't feel great when it's on the downside. When it's on the upside, it feels great. But let's imagine in 2008, you felt very uncomfortable with being in the markets. You were in the short term and you were thinking, okay, I'm going to exit the market. So had you exited the market in 2008, but also made a decision that you were going to re-enter the market 1 year later in 2009, what would have happened to your money from that point until 2021? So it's approximately 101%. So again, you exited the market in 2008, you put that same amount of money in the market in 2009, and then it stayed invested to 2021, you're up about 101% in a balanced profile. Now, what if you had have stayed invested? You didn't have an exit, you didn't have a re-entry date, you stayed invested from 2008 all the way through to 2021, you would have been up about 216%. So that's a big difference. So it's very difficult to time the market on the buy side and the sell side. So if you were making a decision that you wanted to get out of the market at a certain day, you would have to theoretically choosing the perfect day for you to exit. And we really don't see that in the market. You'd also have to be choosing the perfect day to re-enter. And case in point, if you had exited and re-entered, there is an opportunity cost with you not being in the market. Now, this is a balanced profile, and you can look at the Andex chart over any multiple year, decades for that matter, and just have a look to see if you had held on to your investments, if you had theoretically sold, and if you held on to your investments, where would you be now? So true. Financial fluctuations don't really feel good in the short term, but in the long term, they're very beneficial. When we have the markets test multiple lows on several days, and when we have these big swings of volatility, those are the opportunity days. Adding funds in all at once doesn't really take advantage of the opportunities that we have in the market. So if you put all your money in the market in that one day, your cost base is whatever it is on that day. You can certainly invest your money in tranches, different asset classes, and really place that money in a systematic way. And we feel that systematic plans for savings are very successful. So with a systematic savings plan, you're automatically going to be investing in, it's a predetermined amount, predetermined date, maybe it's the 1st of the month or the 15th of the month, whenever you have cash flow available in your account, and a set dollar amount that you're going to put in. Say it's $500 a month or $1,000 or $100 or $50 a month. And so sometimes you'll be buying stocks at a high and sometimes you'll be buying stocks at a low. And the idea is that you have a dollar cost average over time. So you're not really so much involved in the big swings up or down. You've dedicated to investing in you. You've dedicated to investing in your portfolio. And you're going to take advantage of these opportunities of buying in the market over time. So financial fluctuations, certainly, it's a great topic. It's definitely one that you should have with your trusted advisor. If you're going to make any change in your portfolio, your trusted advisor will want to talk to you about the reasons why. It's always important to follow your own personal money story, always important to follow your risk tolerance, and to invest in a way that you're aligned with. I hope that I've shared a little bit more about financial fluctuations, and until next time, I'm Laurel Marie Hickey with 3i Global Wealth of National Bank Financial.